It's a whole new world. Here in Denmark, in this year alone, we have seen interest rates go up from 1% to between 5 and 6%. We have an unprecedented inflation and energy crisis, and all while we expect massive new housing taxes for apartments in the big cities as soon as 2024. So, in this context, if you're looking to buy a house or an apartment in Denmark, should you buy now? Up front, my take is that if you have found your dream home, like the real deal, not a half-hearted one, but actually when you say, okay, this is the place I would love to live for the rest of my life type of situation, and plan to live there again for the medium and long term, go for it. It's definitely not as good deal as it was a year ago, or 3 years ago for that matter, but in the big scheme of things, you'll be okay. For every other case, it becomes a lot more tricky, so let's deep dive into it. So, there are two major factors playing into the housing market at the moment. The first factor, and by far the biggest, is the rise of interest rates. And it has been a big rise. We went from just under 1% fixed for 30 years in January 2021 to over 5% in October of this year. So you can see, of course, a huge jump here on the screen. And this is like the speed of this is unprecedented, and it's all linked to inflation. So governments, and especially the US government, so Americans, thank you, spent lavishly during the pandemic. So people bought a lot of stuff, supply chains got clogged, and fast forward, we got the highest inflation rates in the US and in Europe in over 40 years. You can see now that central banks, led by the Fed in the US, but also here the European Central Bank in Europe and the bank in the UK as well, are rising interest rates higher and higher, with all the point of trying to contain inflation, and that brings a lot of financial earthquakes on the way. Then of course you add to that there's a war in Ukraine, and you have all these sanctions and energy uncertainty in Europe, and at least here in Europe again you have a lot higher rates. And moving forward, like nobody knows what's really gonna happen. So now we are around 5.5% in interest rates for 30 years, and as soon as August, just a couple of months ago, when things look calmer in the market, so things look like the inflation was like peaking and things were doing better, interest rates had already gone down to 3.5%. But then when it turned out the war in Ukraine would be longer, that the US would keep rising interest rates, and aggressively as they keep doing now, interest rates keep shooting up, and nobody knows how high they're gonna be and for how long. And if you look at what Nordea is saying, what Danske Bank is saying, and so on, it looks like the rates we're gonna stay like this at least for a few years. But again, everyone is guessing at this stage. Nobody really knows. So now let's deep dive into how interest rates impact you. So in short, when interest rates were 1% fixed for 30 years, meant that you borrowed, for instance, 1 million krona, and each year in interest, the only thing you had to pay was, again, for each million that you borrow, 10,000 krona, again, per year. There's a bit more nuance into this because there are some fees you need to pay on top of this, 1%, and there's also some tax deductions, but roughly that's a ballpark figure again for borrowing, let's say, as I said, 1 million krona. So 10,000 krona a year to borrow 1 million krona, that's not a bad deal. But that was when interest rates were 1%. Now fast forward, if interest rates are 5%, then it costs you 50,000 krona per year to borrow that 1 million. And it's the same million as before, so it just costs 5 times more to borrow that. And if you, for instance, want to borrow 4 million to buy a place, which now if you want to buy a fancy apartment in a city like Copenhagen, maybe that's what you need to borrow, at least. That went from costing you 40,000 krona per year, again, before the fees and for the deductions as well and so on, to 200,000. So that's quite nasty, I would say. And especially since, again, you don't get any better deal for all that extra money. It's like money thrown into the garbage if you think about it. You don't get anything else out of it. And this means two things. First, you will not be able to afford the most expensive apartments or houses. So if you were at the limit before that you will be able to buy something for like 3 or 4 million, now that limit on how much you will be able to buy is definitely going to be lower. And it's going to be more expensive and risky again for banks to borrow money to other people. So they need to be more picky. Again, if they would borrow you 3 million before, they will borrow you less. And on connected to this is that interest-only loans, which I personally liked so much, became a lot less interesting. So the moment you pay 200,000 krona per year on interest, and not just 50,000, then the game is a bit more different. It makes a lot more sense to pay back your loan when you're actually paying 5 or 6% per year than when you're basically paying almost nothing. So This is a big change, and obviously it will soon have an impact in prices. So according to Boligstiden, which is one of the big websites here in Denmark to track housing and also prices as well, from August to September, and that's the last data I have in hand, house prices fell 1.2% across Denmark, and apartment prices 1.7%. In the capital region, so that includes Copenhagen and the suburbs, prices are down 2.5% versus the same time last year. And keep in mind that nobody knows what's going to happen moving forward. So sales are crashing down, so there's a lot less apartment sales happening and a lot less properties up for sale as well. And here's the nuance a little bit as well, is that you need to remember that if someone has a 1% mortgage in their house, even though they might be tempted to move out because they want more space or they want whatever to switch neighborhoods, you name it, when it's going to cost them so much to move to a new apartment, they might also be less keen on putting their apartment up for sale. Because again, you're going to be paying a lot more for probably less space or whatever, so maybe they need to have more money. So you'll also not only expect a lot less demand for apartments of people having to put a lot more interest rate or like that type of thing, but also you will expect a lot less offer because again, if I would have considered selling my apartment a couple of years ago, I'm getting something slightly bigger. Now it's not going to make financial sense. So I'm definitely not putting my apartment for sale. That means that while yes, of course, demand is going to push down, supply as well. So maybe the prices are not going to crash down as some people think. But in any case, experts say prices will fall between 7 and 10% in Denmark through the end of next year, so the end of 2023, and up to 15% down in Copenhagen, again in the same period, by end of 2023. But again, remember, these are the same experts who said that we would see a major crash in 2020 and in 2021, and again, in that context, prices went up by 30%. So I would expect myself that these projections are roughly correct, but you never know what's going to happen worldwide. Maybe inflation peaks, interest rates start coming down, there's a peace in Ukraine, and Russian gas starts flowing. I don't know. The reality is though that expect a lot of uncertainty moving forward, and the odds of you getting a 1% mortgage again, at least for the next couple of years, looks very, very unlikely. With that said, I mentioned there are two factors in playing into the housing market. And the second is the new property taxes. So these new property taxes are expected to kick in 2024 and will mean that in practice, property taxes for apartments in the big cities are expected to rise a lot. The catch is that, of course, as long as you stay in the apartment you're living at the moment, you will not pay the higher tax rate. But the moment you move out, your new place or to a new place, then you need to start paying these higher taxes. Again, there's a lot more nuance again on this. So these taxes are expected to be lower now for houses, especially in the suburbs, moving forward. But if you have an apartment in Aarhus or in Copenhagen or in any of the big cities, the reality is that they say that they have been undervalued for something like that for taxes. So even though, for instance, I pay a lot in taxes, it seems to be that I need to pay a lot more. The key here is that if I pay, for instance, and I'm making up numbers here, 50,000 krona per year on housing taxes, I might need to pay 80, 90, 100,000 next year. So it's that level of magnitude that we're seeing like heating up, especially like places like Copenhagen, Frederiksberg, as well and so on. And that's pretty nasty. The catch is that so long as you don't move from your current apartment, you won't have to pay the higher tax rate. But the moment you move, the new place you are going to be going to, in that place you need to pay the higher taxes. The point of this is that, of course, if you are kind of struggling to make ends meet, they don't really want to kick you out from your house because you can't pay the taxes. So you will be able to stay, and then you get some kind of tax card that you only pay the moment you move out. Now, this is a big deal, and if you are a new owner of a flat in, again, like a place like Copenhagen or Frederiksberg, Aarhus, in the city, of an apartment especially, you'll have then, after 2024, the double whammy of not only paying a 5% interest rate or whatever, like a lot higher, but also a lot higher taxes. And you will not get any better service or anything, just spending, again, a lot more money for the same thing you could have bought a lot cheaper just a few years back. So this means, again, there's more impact on supply because there's going to be less people willing to move out of their houses, because the moment they move to a new house, they will have to pay a lot more than they do the moment. So if they're really struggling and they really need more space or whatever, then yes, they will move to a new house. But if they're just thinking about it and they thought like, hey, it would be nice, expect people to be a lot less mobile. Again, let's see how this develops, and there's still a chance that maybe this law gets delayed. It was delayed once. But in all cases, we expect prices to cool down, or at least to be a lot less things in the market for people to move into. So expect that also potentially, because people want to fix in a lower tax, they might still buy a place now with higher interest rates before 2024, because maybe interest rates go down, but the taxes most likely not. So that's a little analysis of what's going on at the moment. Next up, you should watch this video over here where I explain mortgages in Denmark, so you understand how actually interest rates work over here. Thanks for watching, and I'll talk to you again next week.